The price of oil under pressure today. There are suggestions, multiple reports, that Ukraine is tentatively agreeing to the outline of a potential U.S. brokered peace deal. Let's get more from Jason Schenker, president of Prestige Economics. Jason, thanks very much indeed for joining us. Your feeling, and I think you've said this before, is that ultimately the settlement here will be a partitioned Ukraine along the lines of Korea in the deal that ended the Korean War.
Yeah, that's right, Andy. Thanks for having me on. It's been a while since we've joined each other. I think I've been writing since March of 2022, since shortly after the Russian war on Ukraine started, that the most likely outcome would be a country divided, a begrudged armistice, a demilitarized zone, and a country that might be this way, right, sort of torn apart for the better part of this century. And that does seem to be what we're moving towards. And although it seems like there is progress and that there is a willingness on the side of the Ukrainians to move this along, the question is, are the Russians willing to move things along? It takes two to tango, as it were. And the question is, do we actually see movement? Are we closer to a negotiated agreement? Yes, but there's still quite a bit left to the runway here.
So the worry here, of course, will be that Putin will come back and just take another bite. America, Western Europe may offer Ukraine guarantees, but the Ukrainians could say, well, we heard that before when we gave up the nuclear weapons after the Soviet Union collapsed.
I think that's right. There are a couple of pieces here. I think the proximate risk is that maybe Putin says he's not really interested in these terms, and the terms he wants are far more expansive than what's in there, right? I mean, Russia's been pushing for these maximalist demands to gain maximum control over territory in Ukraine. Is this something that is that golden bridge you can build for Putin to cross that kind of ends the war? Is that enough? And so I think that's the proximate question. But you're right, in the medium term, are we sure that peace can hold? And I know there are certain planks in there that allow for various kinds of weapons in support of Ukraine that would hopefully provide the disincentive towards additional future conflict, provide effective conflict deterrence. But those are also things that might keep Putin from wanting to push this agreement forward as well.
Can we just broaden our scope here? You came out with a book this year called Cold War II, and obviously China, a big part of that as well. What are the implications for commodities, do you think, in years to come with this power tussle between Russia and America, but more especially between America and China?
There's two sides of it. On the one side, you see with Russia over Ukraine, because Russia is such a big producer of so many different commodities. When the Russian war on Ukraine happened, we saw these massive spikes in commodity prices, which engendered all kinds of inflation globally. Now, as we see the potential for some kind of an armistice, a negotiated agreement, you see oil prices under pressure. Why? Because, well, then you'd expect that these commodities will more broadly enter various markets, right? We suddenly would get more access to Russian oil, Russian aluminum, Russian nickel, and many other materials. So we could see commodity prices come down there. The risk between the U.S. and China are that if China has an undeterred ambition to gain control of Taiwan, and 2027 is the year that's been floated, that's the year she wants China to be able to take control of Taiwan because it's the 100th anniversary of the People's Liberation Army. If that happens, then you could end up with overnight economic amputation of a different stripe, where suddenly you just can't, Canadians, Americans, many other countries will probably no longer be able to get any goods from China. And there would be questions about what goods we could get from Taiwan. And of course, China's a big net importer of commodities. That would be a different question. If suddenly those commodity flows stop, that could also prove bearish. But for finished goods, that could be inflationary.
And then, of course, there's the question of chips from Taiwan. It would there'd be a threat of paralyzing the whole tech industry as a whole.
Absolutely. That's the risk. That's why we see a lot of U.S. strategies. I know we've talked about throughout this year, a lot of the U.S. policies around trade and tariffs are to focus on transshipments to try to engage in economic containment, provide economic pressures, and effective deterrence to prevent China from making a grab for Taiwan in 2027, to try to improve U.S. economic self-sufficiency, to bolster our status as a credible threat, to reduce that ability of China to think about taking Taiwan. Because if we were to lose access to China, that's bad, right? If China gets cut off from the global economy, bad for China, bad for the global economy. If Taiwan gets cut off in the process, right? China blockades Taiwan, as they did multiple times last year, both in May and October, in Operations Joint Sword 2025A and 2024A and 2024B. If they were to do a permanent blockade, we could find economic amputation not only for just China, but also Taiwan, where then we can't get the chips and we can't get all kinds of other ICT industry goods that we need for our economies. So these are really big risks. And then, of course, in Asia, there's contagion risk, right? This is something that the Republic of Korea and Japan are very concerned about. So these are all very much moving pieces, but if we can get this one front of Cold War II to calm down, then we can shift our attention potentially a bit more to providing more credible threats, more effective deterrents to prevent kinetic war with China, to provide those disincentives to avoid a war over Taiwan.
And just backing back to Russia and Ukraine, you do, and Jason, you may have touched on this, but oil, if it gets a blow here because there's a peace deal and sanctions come off Russia, you say that's just adding to an already bearish backdrop for crude?
Well, I think that right now we do see crude's under pressure because there is so much global uncertainty. I think we would see prices come under pressure now. I do think prices will likely be a bit higher next year because we have seen some interest rate cuts. We'll likely see more cuts ahead. Lower interest rates are things that should support, and many central banks around the world have been cutting rates. We are likely to see increased demand next year, but we could see some short-term significant downward pressure once a peace deal is announced. But if that provides economic optimism, then you could get more demand next year. And oil's not going to go bad. It will still be consumed at some point. And the question is, are we continuing to build global growth? And if we look at the IMF figures, global GDP is expected to be above 3% this year and next year. And if that growth rate kind of continues going forward, you're looking at more oil demand in the future. And that will be fundamentally supportive, even if in the short term there's downside price risk.
Jason, thanks very much indeed. Jason
Thank you,
Schenker,
Andy.
President of Prestige Economics.